I'm Ian Belina, your host, and we have the pleasure of being joined by Simon Dixon, all the way from Isle of Mans, I believe. Is
That's
that
right.
correct? All right, yeah. And you are the CEO of the now famous Bank to the Future, right? Which is a global investment platform. So very glad to have you on the show. Welcome.
Oh, thanks for having me. Great to meet your audience and happy to go through whatever we want to go through today.
All right, sounds good. And guys, as usual, right? This is just us discussing and sharing our personal opinions. Definitely not investment research. Always do your research before investing in crypto. Crypto assets can be risky. Consult a financial advisor before investing in any kind of investment, and only invest what you're willing to lose. This is just a free video. This is not in any way, shape, or form a sponsored video. All right. With that out of the way, how are things with you?
Awesome. I mean, what an amazing week it is this week. We've got global politicians all around the world engaging in the crypto markets. Facebook seems to have caused an absolute wave in crypto. So it's
Yeah.
great to see, great for Bitcoin, and a very exciting week and very comical week as well.
Absolutely, because I was watching a video, and one of the Congress people was talking about the difference between Bitcoin and a shitcoin.
I think that's going to go
and
down in crypto history.
yeah, so I think that scene has already gone viral. Now, so you happen to be a crypto OG, right? You've kind of been in this space for a very long time. So can you kind of tell those people who may not know who you are about yourself and about Bank to the Future?
Sure. Yeah. I mean, I was in the right place at the right time discussing the right topic. So I used to work in investment banking. Prior to that, I did a master's in economics and was always really interested in different schools of and theories in economics. But I worked in IPOs and market making for an investment bank called KBC. And I decided to leave in 2006 around to return to my passion about how economics have really got the theory of money wrong. And we're building our whole economies based upon an incorrect theory of how money is created. And I did a lot of educational seminars and talks all around the world, tried to make some changes in the banking system, and really just got frustrated. So it was around about 2010 that my wife came to me, slapped me in the face, and said, "Look, this isn't really getting anywhere." The financial crisis made people very interested in the subject. But no one was looking at the roots of money and how it's created and the effect it has. They were just looking at perpetuating a debt cycle. So we decided that we wanted to create a bank ourselves, and I wrote a book called Bank to the Future. And because I was writing a book on the future of money, and it was a time-traveling fictional non-fiction book, we decided that we wanted to actually create a non-fractional reserve bank, is what it's known as, which is essentially a bank that doesn't create money as debt, in order to show the world. It didn't quite work out that way because it turned out that regulators wouldn't allow us to create a non-fractional reserve bank. You have to create banks in the traditional way and hire executives experienced in banking. So we set about, at this stage, I was fortunate enough to be invited to speak at the very first Bitcoin conference in the world. So if you search the YouTube archives for Simon Dixon Bitcoin 2011 Bitcoin conference, you'll see me speaking at the first Bitcoin conference. And that really, I covered it in the book. The book became the first published book that included Bitcoin. And we decided to pivot the company that we created, that we wanted to be a bank, into an investment platform whereby we could invest in lots of financial technology companies, lots of crypto companies. We spend many years on the regulations, but we, are now it's a platform that facilitated many of the early funding rounds in companies like Kraken and Bitstamp and Bitfinex and companies that went on to become unicorns. But Bank to the Future was a platform whereby you could build a diversified portfolio in equity in these companies. And obviously, we've seen a lot of different trends and a lot of different things happen over the years. And so really been an observer, an investor, and actively involved in many of the different things that have led to the crypto market that's shaking up the world and got the whole world's attention now today.
Wow, so I find that very fascinating. So you were basically a banker, but you were early in Bitcoin. which is very, very tough to do, right? Because banking is kind of a very conservative field, right? So you're somebody who is very, very willing to kind of venture off the deep end to try something new and experiment. And now you're basically innovating in the space with Bank to the Future. Now, I am also on the platform, right? And I find it very, very, how do I put this? I mean, it's really something that's needed in crypto, right? So because me personally, my audience has seen me create more content around security tokens and being making more equity investments, especially after the bear market we had the last 1 year and a half, right? Where pretty much every altcoin that had an ICO is now pretty much obsolete, right? And investors got very, very jaded and also got tired of not really having any rights, right? So I've seen more investors look towards security tokens, equity offerings. Now they definitely haven't uh, peaked or gained the amount of awareness like ICOs did back in 2017, but I still think we're very early in this space, right? So what's your take on security tokens and equity offerings, since that's something your platform is really geared up to thrive with?
Yeah, so we've been doing equity products. We started this journey in 2010. It took us about 4 years with the regulators to get a model that works. And then we've obviously been looking at international. The problem that security tokens are facing today is a problem we've been wrestling with for many years since we started in 2010. And that is that you can comply in one jurisdiction, but how does that relate to other jurisdictions? And really, things that in the early days, it was really hard for us because when we first started the company, it was in the UK and we were registered with the FCA on the register. And that only allowed us to work with UK businesses for UK investors. Now, you can imagine crypto back in 2013, 14, 15. There was no UK companies and there was not enough UK investors that wanted to even get into Bitcoin, let alone equity in crypto companies and fintech companies. So we were grappling with those issues for an awful long time. We put together, for example, equity offerings whereby we were the very first miners in Ethereum, for example, right from the launch. And so we had equity products that gave people returns in ETH. As a result of mining when it was way below $1. I remember the day it hit $1, and everyone was going nuts because they got such a good return on the equity. So we've been thinking in terms of securities for an awful long time, and you've got to remember the ICO market did start in about 2013 with the Mastercoin built on top of Bitcoin, and it was Vitalik that was trying to progress the market and ended up getting his project funded by the Bitcoin community to build Ethereum through the Ethereum ICO. And then it almost went bankrupt in the process because they ran out of money. It was during the last Bitcoin bear market. They just got the technology out and then a bull market started and Ethereum went on to become what it was. But you've got to remember, the first time an ICO was really thought about was in 2013. But it wasn't until 2017 that we had deep liquidity and shaking up capital markets in the entire world. And obviously, because it was done where anyone could participate, there was also all the scammers and all the problems that come along with that. So that was a great learning curve. It was a really exciting time in crypto history. Really now, people are taking on some of the problems that we've been working on for a long time and applying that to ICOs and thinking of them in terms of securities and investments. But really, that whole piece of work started after the ICO boom in 2018. So if you look at it, ICOs were 2013 until 2017. So that was like a 4-year cycle. So if you take that and try and project that out into the securities token market, people are thinking about them in 2018. There's a lot of infrastructure and businesses coming in that, but it might not be until 2022 that we have deep liquidity, real disruption in capital markets. And so although this is a really, really fast changing market, you still got to have patience to see through some of these trends that actually take a while to play out, especially when we're at the stage that we are right now where all of the financial institutions in the world are now looking at this market.
Very well said. So I think definitely applying that timeline of maybe 4 or 5 years, so 2022, definitely does seem to me like really the perfect timing for things to really come to fruition. Now, speaking of innovation when it comes to security tokens, we do have the SEC last week announced the first SEC qualified offering, right? Reggae Plus with Blockstack, then followed by Props. What's your take on those two and that news?
So this is good to see. You know, a bit of history helps here. So the Jobs Act was really the first sign from US to actually allow people to invest online in different offerings and allow more people to invest. That work actually came from the work that we were originally doing in the UK, because the UK was the first country to allow for this format of investing in equity online. It was a couple of years later that the US started looking at Jobs Act based upon the success it had in the UK. And then we had different jurisdictions all around the world adjusting. And more recently, you know, a few years later, you had things like Reggae Plus. So to put all that jargon into terms, you know, Reg D is an offering in compliant with US securities laws that allow you to reach out to high net worth investors. Reggae Plus is their way of opening it up to retail investors and allowing it to trade on a market. And that's now, you know, that didn't really get much traction when it first came out for traditional equity. But now people is seeing the ICOs and seeing the security token offerings is really the next wave of Reggae Plus being applied to blockchain technology. And these forces coming together, allowing everyday people to invest in these products without having to kind of sugarcoat it as it's not an investment when lots of people are investing in it. Really, it's really just the first stage, because we've still got, you know, to look at, well, can a cryptocurrency exchange allow for secondary market liquidity in a Reggae Plus offering? No, because they don't have a securities token license. So now we've got to build the whole next wave of exchanges which are able to comply with securities laws and registrations in order to trade these different products. So it's really just the first step. You know, really the ICO outside of regulations, it moves so fast. Inside of regulations, it's going to be a bit slower to get to where it was.
Okay. Now, how have you guys handled regulation and also expansion? Because I did see that you guys made an acquisition of a company in the crypto space, I believe, right? An exchange.
Yeah, so at Bank to the Future, we're doing quite a lot of mergers and acquisitions activities. You know, one of our recent announcements was the acquisition of altcoin.io. Now, altcoin.io is a decentralized exchange that we're looking to adjust to be a self-custodial securities exchange. Now, that might sound like a load of jargon, but what Bitcoin did is it gave people the ability to own their own money and choose whether they want to deposit it at an exchange and have someone else look after it so they can trade. So, you know, you have the choice in crypto of having someone else look after your assets or you looking after your own assets. The best practice is always to look after your own assets, but that requires an attention to personal security, understanding a bit more about the technology, and therefore it's a bit of a learning gap when people are inherently, you know, just want to have someone else look after that, trade quickly, get in and out, and they've got other things to do. So what we're doing is we're running two models side by side. We're looking to disrupt ourselves, whereby we're using the full benefits of security tokens, blockchain technology, and now the fact that these can be built on top of Bitcoin with things like Liquid and you know, lots of innovation there. But at the same time, we're keeping our centralized model and we're trying to run the two side by side so that we can disrupt ourselves. Hopefully more people will choose that new way to do things and the way that crypto was actually designed. But we also appreciate that this is a timely process. There's a lot of education. There's a lot of adjustments in helping people get over so they can choose between the centralized model and the more self-custodial model, the way the technology allows.
So could it be said that the integration of altcoin.io is really bringing a marketplace, kind of like a DEX for security tokens on your platform?
Yeah, so what we're aiming to launch in 2020 is a security token exchange whereby people can connect their wallets, use some of the security token the compliance that they've got from Bank to the Future in terms of accreditation, certification, verification, all the things you need to do to trade securities. and do that in a securities token exchange where these things are all tokenized, and do a lot more innovative things than our normal plain vanilla product at banktothefuture.com.
Wow, interesting. All right, now any updates for the community? Anything in terms of you would like to share?
Really, we'll look out for a few more announcements that we've got coming. We've been doing quite a lot of mergers and acquisitions. We launched the Bank to the Future token last year. We figured out a way of doing that in compliance with securities laws. Did all the correct registrations. So we're really happy. But we also maintained the fact that it is a utility token, so you can use it on Bank to the Future to get priority access to deals if you stake it. You can also get discounted trading fees, much like on Binance. You can do that on our secondary market when trading in the largest companies in crypto. And so we're looking at doing a lot more integrations with the Bank to the Future token and really building that out into our securities token exchange as well.
Now, where's that token available? Is it directly on the site
so
or
if you look us up on CoinMarketCap, then it's currently traded on, I think most of the volume is in Huobi, Bitfinex, Bittrex, Gate.io, several other exchanges that do the trading, because it is a utility token.
Yeah. Now I find that interesting, since you're kind of the security token guy.
Yeah, I mean, certainly we would look to make our equity tradable as a security token in the future. All of our investors were from banktothefuture.com. We funded the business predominantly through the growth in Bitcoin and also through equity offerings on Bank to the Future, as well as revenue and growth. So we'll surely look to do a security token at some stage. But we also really believe in the power of what you can build around a utility token network, and allowing it to be used for payments, membership, and rewards. That's something that's really important to us. And so these are two different things.
Okay. All right. So let's take some questions from the audience. So the first question from Twitter, somebody's asking, what's BNK?
Yeah, that's an interesting story. So we own the domain banktothefuture.com with the A and without the A. When we first started, as we said, we wanted to create a bank. And so in order to use the word bank with an A, you actually have to have a banking license. It's an IMF, International Monetary Fund rule, and World Bank rule, and followed by many jurisdictions around the world. So when we decided to pivot from being a bank, because we didn't like the model and Bitcoin was essentially creating a bank in a box, and we just wanted to create an investment platform for investing in lots of companies, we still had a brand. So we took out the A because you're allowed to be called BNK to the future. But both domains work, and we still own that. But unfortunately, unless you have a banking license, you can't have the word bank in your name. So we had to kind of pivot the brand at a certain point as the strategy changed.
Oh, wow. So do you prefer to go by BNK to the future or still Bank to the Future?
It's Bank to the Future. That's how it's easier to say. Okay. But use either domain, bnktothefuture.com or banktothefuture.com, it will redirect you.
All right. Next question from Arun. It says, please explain how your platform works, starting from listing, who are qualified to invest, and explain about secondary trading markets.
Sure. So firstly, we deal with just financial technology and crypto companies. We hold a theory that the future of finance looks very different from the past, and every single financial product in the world is going to be disrupted one step at a time by financial technology and crypto companies. That was our investment thesis when we set up the platform. I personally, did well out of crypto and wanted a way to invest in lots of different companies. And Bank to the Future was the solution that we put together in order to be able to do that. A company would come along and they would hit the apply for finance button. They'd upload their investor deck. And we have a process for filtering out those deals. We get lots and lots of applications, but we only tend to work with about one a month. We're looking for really deals that are our established investor community. We've got over 80,000 qualifying investors that have been through the process. And really, we know what types of deals that they're looking for. They're looking for companies, by great teams gone through a due diligence process, and also already been through the process of maybe securing a venture capitalist investor. So they've been through a tight due diligence process, and then we would allow our investors to co-invest on the same terms. So those are types of things that we're looking for. So they've been through a lot of the VC due diligence as well. Then the way that our platform actually works is these companies don't want to go public. They're too early to go public. And so we put together a special structure whereby we put a special company in the middle. That middle will kind of act like a venture capitalist, but behind that is all the investors that invest through our platform. So for each deal, we'll put together a special company. The investor will own shares in that special company, and it'll be one-for-one backed by shares in the underlying company. This way, we can deal with all the corporate actions, and they don't have to have thousands of investors on their table that messes up their chances of raising funding in the future or having to act like a public company. But because we did it in this structure, if the company really makes progress and becomes an established brand, like companies that are on our secondary market now, like Ripple Labs, Bitfinex, Coinbase, Circle, some of these other companies that are established household brands, then we'll allow people to place buy and sell orders and buy and sell from each other, and we'll put them together and facilitate all that process on our secondary market. So really, you've got early stage primary offerings. We look for them to have secured a VC, go through our due diligence process. Of the thousands of deals we receive, it's filtered down to a few. Then you've got the process of the investor community. We put together a special structure in the middle so that we can handle the ongoing investor relations and corporate actions. And then if the company becomes more successful, it might qualify for our secondary market, at which case people can place buy and sell orders and decide to buy and sell some of the more established companies in crypto.
Now, are you able to share the volume numbers on that secondary market?
You can actually get those. So you can see the price that. So there's a few parameters there. You've got the price of the underlying company, which is really the last funding round or a price that a VC invested at. Then you've got the value of the SPV, which is the special company that is backed by those shares. That special company could trade at a discount or premium to the underlying company. People might decide that because they can invest a smaller amount, like $1,000, in the company, that it might actually be at a discount or a premium to the actual value of the underlying company. But yeah, the valuations are there. We give estimations of the number of shares. Sometimes information rights aren't available, so the full information is not there. It's still not a public company at the end of the day. So when you register with us, we take you through a lot of the risk warnings, that information is scarce, and dilution is a risk, and all of these things. We really try to make an effort to make sure investors understand how risky it is investing in such things, because it is at the end of the day a high risk, high return asset class. But yeah, you can calculate some valuations, and we have investor forums for each deal where you can try and get other people's perspectives as well. But again, you gave the good warnings at the beginning. It's non-advisory. You can't give financial advice. You have to do your own research, and you have to make an evaluation at the end of the day of whether you think that's undervalued or overvalued and the growth prospects for the company.
Wow, very nice. So somebody's asking, the website is bnktothefuture.com. That's bnktothefuture.com. That's the website. Also, Bank to the Future works as well, right? .com. Next question, somebody's asking, pretty much, can retail investors use the website, like non-qualified, non-accredited investors?
The answer is we open it up to as many investors as we legally and compliantly can. And each country has different rules and restrictions. And so we've gone through approximately 50 different securities laws, and created custom onboarding processes for each jurisdiction. So in some countries, it's not retail investors. It's open to, if you're in the US, accredited. If you're in a different country, then it's a different definition. But some have, for example, sophistication tests, where if you can prove that you understand the product and meet certain requirements, our onboarding process will take your country, and it will walk you through a custom onboarding process. based upon your country, and it will tell you whether you qualify or not. But there's no blanket term because we've gone through lots of different countries and gone through the different qualification criteria in many different jurisdictions.
All right. Next question from James. He's asking, do you think infrastructure will be built, or will utility tokens, in other words, dApps, be built as the next wave?
I think that I really believe that. So, you know, I'm a finance geek. I like finance, and I believe that a lot of these applications are going to have profound impacts on financial technology, financial products, and those are areas that I can speak to because I really believe that certain things can be automated into smart contracts when it comes to financial products. I think that we are miles off in terms of having the level of adoption needed in order to make these products work. I do think we will eventually get there. In terms of decentralized applications of different use cases, I tend to only speak to what I know, and really I think the major impact is Bitcoin disruption in central banking, Ethereum and other products built upon Bitcoin and other blockchains, disruption in capital markets. And I think that the financial products are going to be the area that has the most disruption as a result of this technology. Whether that starts going into, you know, decentralized internet and ride sharing and all those other types of things, the jury's out, but it really depends upon adoption of people using these financial products and using it as money. Then you can start thinking about whether they'll use other applications once they understand how to use a decentralized money.
Okay, very well said. So Janko is asking, is the token BFT?
Correct, yeah, BFT is the Bank to the Future token.
Okay. All right, next question from Arun. Do you provide any educational series? Since I'm from India and not sure about the differences in accredited and sophisticated, etc.
The answer is yes. So I go live each and every week on a show called Bank to the Future Live, and that's just for our investors that want to learn and ask questions. So we have a YouTube channel, and on that channel is literally just a show. So personally, I cover a lot of economics, a lot of crypto, a lot of finance, a lot of banking scandal, all that type of stuff on my personal Twitter. But for those that want to actually find out more about how to invest in these different asset classes, how they all work, then we have each and every week a live Q&A, AMA, where we go through the different terms, and a newbie can ask as many questions as they want to ask, and we'll try and answer those without any assumptions. So yeah, we do a live show each and every week.
I've actually seen the live shows, and they're very, very helpful.
Right.
Now, I also do have a security token video that's pinned to my channel, Arun, as well. That's pretty helpful for beginners. It's about 40 minutes long. Okay, next question here. Let me see. Okay, never mind. That was somebody trying to pump their project. But let's talk about Facebook Libra. What's your take on it?
I'm really excited about it, actually. Firstly, it doesn't compete with Bitcoin in any way, shape, or form. It drives adoption in Bitcoin. So let's get that straight out. You know, Bitcoin gives you the ability to own your own money, spend your own money, and it has a fixed monetary policy whereby there's only a fixed supply, and therefore the value of it tends to go up over time as long as the demand for it becomes more and more useful. And I believe that it will become more and more useful. From that, you have lots of different innovations. So Tether, Bitfinex came along and created Tether, which was a way for you to hedge in and out and go to lots of different crypto exchanges by pegging it in a stable value so that you could you know, have an on-ramp and off-ramp between the fiat world and the crypto world. I think Facebook is going to have a really, really big impact. And I think that it's going to drive people to understand the value of Bitcoin. It's going to do several things. Firstly, it's going to bring a few billion people into the crypto world. It's already got all the attention that is needed in order to drive adoption in cryptocurrency to the next level, really. And we've seen that this week. It also brings to the forefront lots of the questions that need to be answered. And also, fortunately, because it's in a globally competitive environment, if one jurisdiction decides, the US, that they don't want that, then Switzerland is open and other jurisdictions are going to compete. And then you have already things like in China, you've got WeChat Pay and Alipay, which are already doing a lot of these things. And crypto, it's an incredibly interesting time. I personally probably won't use it. I might use it for a certain use case of everyday spending. But it certainly won't be, the same thing as Bitcoin. The other thing that will happen is you'll have that chart. So you'll have that chart of Libra versus Bitcoin, and people will be able to see, oh, right, this is what's happening to the value of my Libra because it's backed by the dollar or the euro or whatever it's going to be backed by. And that's going to be a really, really good force for education for people to understand the difference in some of these different cryptocurrencies. It also, because it's a centralized company creating it, it's going to have to comply with so many different regulations, and that decreases the user experience of using that cryptocurrency because it's so difficult to use. And therefore, that will drive people into understanding why Bitcoin exists and why it's important. So I think it's an incredibly important step forward. And I think it's going to really, really drive adoption into more decentralized cryptocurrencies, as well as creating a very seamless onboarding process for people to understand and figure out more about cryptocurrencies.
Yeah, I mean, I fully agree. I think the platform Facebook gives the entire crypto space is incredible. I know lots of people are against it because it's centralized, but to me, I feel like yes, it's centralized, but the marketing, the awareness, the eyeballs are definitely worth everything, right?
Yeah.
And to my surprise, I'm actually surprised with with how great the technology is itself, right? Because I feel like people were expecting just a stable coin, right, backed by assets, but they put out a smart contract blockchain, and I've been having some developers go through the code, and they're just blown away by how well built it is. So actually, for me, I know Twitter gave me some flack a few weeks ago because I talked about how I think Bitcoin is kind of king now, right? But I feel like with the big companies coming into the space, the Facebooks of the world, 90% of altcoins will die, right? Because now they're going up against real competition, right? Now, because weren't back in 2017 anymore, weren't back in 2013 anymore. Now the big players are coming in, and I feel like they really have to innovate, right? So, because now we have so many protocols just trying to compete on transactions per second or whatever other arbitrary metric, but now they really have to compete against Facebook, right? So, not just Facebook, but Bitcoin and Facebook, and I feel like it's really going to filter out most of the garbage.
Yeah, I mean, it's important to make some distinctions though, because a lot of people tend to drive this all into one thing called a cryptocurrency. But Bitcoin is the best shot the world has ever seen at achieving sound money because it wasn't created by anybody and nobody can shut it down. And it's reached a level of security whereby it's the largest supercomputer in the world. And the fact that it doesn't change much is one of its real value propositions. On top of that, there's things like sidechains and Lightning, which hopefully will drive different use cases, but those are yet to be determined. But then when you're looking at things like Ethereum, you can't really compare Bitcoin with Ethereum. Ethereum, I know they're going to change their money supply, but it was an inflationary supply because it was designed to build smart contracts. And therefore, the higher the price, the worse it is for building smart contracts. And so really it's disruption in capital markets. And then you've got lots of people trying to compete with Ethereum in terms of smart contracts and different things. But and then you've got things like XRP, which is just completely different as well. It's not really a competition, these things. Then you've got tokens, which are more like stocks and shares. And then you've got security tokens that are coming through. So there are only a few people competing, for example, to be sound money. And Bitcoin has won that game, in my perspective. But then you've got different use cases, and those may or may not be done on Bitcoin. They may or may not be done somewhere else. But it's very important to make some distinctions around what these things are. So if I talk about the Bank to the Future token, do I ever think it's going to compete with Bitcoin? Absolutely not. We're not trying to compete with Bitcoin. We're just capturing our little piece of our niche of what we're doing. And that may or may not, and it's certainly not to be thought of as of trying to compete to be sound money.
Yeah, I mean, so I was referencing specifically those smart contract protocols that are trying to like say them better than Bitcoin, right? Because without mentioning any names, I'm just saying that the time has come, basically.
Yeah.
All right.
Well, and again, you can make the fastest blockchain in the world by making it fully centralized, and you can then achieve PayPal like number of transactions per second. And so it's just degrees of how centralized you want to go in order to achieve greater scalability and more transactions per second. But it might not be the greatest technical feat in the world. So there's different, EOS is kind of in a hybrid scale where they say, well, let's get 21 node operators. Facebook said that they're going to have 100 node operators with the largest companies in Silicon Valley and card payments and Visa and stuff. And then over a 5-year period, aim to be decentralized. I don't know how they'll achieve that. But really, and then Bitcoin is this thing that is decentralized, in terms of the different operators can't get their way, which is why we have the scaling debate, because the miners don't own the network, the developers don't own the network, the users don't own the network, and they all have to fight amongst each other to get a change. And that is very hard to achieve.
All right. Next question from Twitter. Somebody's asking, what are your thoughts on privacy coins like Mimbo, Wimbo, Grin, and such?
I think they're all great experiments in terms of what can be implemented into Bitcoin in the future. I think they do serve certain user cases, and I think it's useful to have different. Privacy is a really important issue, and we're going to see that more and more and more. Personally, when I bought my house for Bitcoin, and I had to do 9 months of proof of source of funds, source of wealth. And the bank actually hired a forensic investigator to take it all the way back to the Genesis block to prove that the funds were actually not gone through a dark market or not derived from illicit activities. So, I think those processes will get better and bigger in the future. But regulators are certainly caught on to the power of blockchain and how they can, use that for tracking in the future. And there's going to be this constant to and fro between privacy versus the government's agenda to achieve anti-money laundering, transparency. And this really is what I believe to be the biggest battle of the future. You can look at it like rules like in Europe, they have something called GDPR, which is about privacy protection. But at the same time, they have anti-money laundering laws, which is becoming bigger and bigger thing. And, and governments really, they say it's about anti-money laundering, but come on, who's going to use Facebook's cryptocurrency to do money laundering? The world's largest database that knows more about more people than anyone in the world, that the government has a backdoor to try and get the data. They rely upon Facebook. They can do KYC and know your customer better than anyone else in the world. If I was a terrorist, I'm certainly not going to be using Facebook's cryptocurrency in order to perform the crime. I'm going to be using the dollar at the large scale at the central bank level where money laundering does happen, or in the cash economy at the lower scale. But let's face it, this is about tax collection and data. The worlds are battling out over how to collect tax. And so privacy is going to become a bigger and bigger issue that needs to be resolved. And privacy coins might end up winning the game for that, or they might end up being a great experiment to show what can be done on side chains of Bitcoin or on the Lightning Network. We'll see.
All right. Okay, next question. Somebody on YouTube is asking, did you study at Kingston University? They think they know you personally.
I went to Kingston University, and that's where I did my degree, and I did a master's at Manchester University in the UK. So maybe there's someone from my older university days in the audience.
Yeah, small world, huh? Okay, let's see here. Yeah, so in general, though, what's your outlook on the crypto market over the next few years, right? Because now we're starting to get more and more big players into the space, right? We mentioned Facebook, JP Morgan, Samsung. So what do you think the future is headed?
The writing's on the wall. The crypto market is here. It's here to stay. I think Bitcoin's going to become more and more important in the world to more and more people. I think over time, the user experience of money is going to get worse and worse and worse due to policies around control, privacy, money laundering, controls. And I think that's going to be driving people into Bitcoin. So I think Bitcoin has a good shot of being sound money. What I'm really interested in is the next systemic risk in the financial system, because we have not solved anything since the last financial crisis. We had a financial system that imploded and almost ended and all banks around the world because there was too much debt in the system. And so we solved that by chucking in 10 times more debt than originally caused the financial crisis in the first place. So we kicked the can down the road. The government's lowered interest rates to the point where you have to pay to save because they want you to take on more debt with negative interest rates. Some banks bailed in. They just took rich people's money to prop up the banking system. Other countries like the UK just bought all their banks and privatized the banking sector. Others bailed them out and just gave them lots and lots of money. And then others used central banks in order to create vast sums of debt, which allowed to stimulate the property markets again and allowed large companies to buy back their stocks and create a stock market bubble. What I'm looking for next is some kind of small systemic risk event. It might be, I don't want this to happen. I just think it will. I don't want people to get hurt, but unfortunately they are going to. It might be, last time it was a tiny little country like Iceland, which created carnage around the world. It might be a student loan crisis. It might be a credit loan crisis. It might be a little jurisdiction that has a niche problem where the banks have taken it over and created really problematic things. But if these things happen and we get a decrease and Bitcoin becomes an uncorrelated asset class, then I think we're going to have a really, a max exodus towards trying to put some institutional money into Bitcoin. And I do think that the next financial crisis, the central banks are going to bail out the system by creating their own cryptocurrency or stablecoin. And they're going to allow banks to go bust. And then if you had deposit with that bank, they're going to allow you to download the app for the central bank created cryptocurrency, and they'll replace your deposit with money that was created by a central bank as a digital currency. I think that's going to be the tool. Blockchain and digital currencies are going to be used to allow the banking system to go bust. Well, what's going to happen then? The central banks are going to be competing with retail banks. The retail banks go bust. Financial technology companies are going to be building on top of central bank created digital currencies. That means that there's going to be a lot more control. If you go across the border, they don't like how you're spending it. They'll switch off your passport and your wallet at the same time and drive people to want to use an apolitical, decentralized cryptocurrency like Bitcoin. And I think this is going to be one of the largest shifts in wealth that we've ever seen in history. People that are on the right side of this trend versus the people that are on the wrong side of this trend. And unfortunately, we're all driven to speculation because at the end of the day, while you might see cryptocurrency as a tool for speculation, every decision you make is a speculation. If you decide to outsource your financial decisions to a pension fund, you're speculating on whether that pension fund will do that. If you hold it in cash at a bank, you're speculating on the credit risk of that bank. If you put it into real estate or property, you're speculating on governments continually pushing up more system in order to perpetuate those different markets. And so we all are forced into speculation. The question is, are you going to allow someone to speculate for you, or are you going to actually make the speculation for yourself and decide and make an opinion about where this goes? Unfortunately, most people will outsource speculation to someone else. And I think that's going to be one of the biggest wealth redistributions that we've seen in history as a result of this tiny little experiment called Bitcoin, which is really creating, mass change across the entire financial system at the highest level.
Yeah, well said, well said. Now, so you mentioned you wrote a book called Bank to the Future that mentioned Bitcoin, right? Where's that book available?
You can still buy it on Amazon. It was actually, I started writing it in 2010. It was the first published book in the world that included Bitcoin, as far as I know. It is actually, there's certain things, can you imagine like trying to forecast things back then? There's certain things I cringe a little bit embarrassed about, but actually I still think the content is completely relevant today. because it was talking about some of the real, trends and how to protect yourself before governments go bust was the subtitle. And I still think a lot of that content is still relevant today. It was just written at a time when a lot of this stuff was uncertain. But it did actually predict, a lot of the trends and forecasts, a lot of the trends that I think, some of those things about, I think it did a pretty good job. And it was written not assuming you knew anything about finance. It was written really for people that really don't know much about this subject and people that are experienced in this subject to look at it from a new perspective, understand money. And it's got a bit of a fiction in there where we time travel around and fix the financial crisis and see some of the effects. So I'm still fairly proud of it, but there's still a few things that make you cringe because it was written such a long time ago.
Yeah, I mean, as somebody who makes content and then having to go back and look at it years down the road, years in the future, I definitely know exactly what you mean, right? I think we've all been there.
Yeah, I think it's a function of growth. If you're not embarrassed about your previous content, then you're not growing.
Yeah, well said, well said. Now, do you have any books you would recommend in the crypto or Bitcoin space?
Oh God, that's such an interesting question because I used to really, really read a lot of books, but I think technology has turned me into such an impatient, person that needs to consume content immediately that changes in such a fast environment that I rely upon YouTube and Twitter for my content now. I do think Saifedean Ammous did a great job with the Bitcoin standard. I haven't actually, I do have to confess, I haven't read a book for quite a while. I've really, the content just moves too fast in this industry, and every day is a new day in crypto. 3 months feels like 10 years in the other world. So I can't imagine any book. I guess, Andreas Antonopoulos is just a great guy. You should definitely check out his work. Been around for a long time and explains things in a really articulate way. Saifedean Ammous did a great job, but I think YouTube and Twitter is the best place to get your content today.
All right. So next question from YouTube. What's your take on stablecoins, and how do you think they're gonna evolve the space?
I think stable coins are essentially a movement away from fractional reserve banking to non-fractional full reserve banking, and I think it's a positive step forward. If we have lots of digital assets that are backed one-to-one, then really that is the full reserve bank that I wanted to create all those years ago. The only problem is that you have a Ponzi scheme that backs them, which is fiat currency. So if we can move towards central banks bailing out the banking system, washing away all the debt-based money, replacing it with stable coins, then you're moving towards an equity-based system. Then you can have collateralized loans, peer-to-peer loans, and really moving away from crony capitalism. It will create another set of issues, certainly, but fractional reserve banking is the largest regulated Ponzi scheme we've ever seen in financial history, and fiat currency is a ticking time bomb that needs to be replaced. And I think stable coins are a way of moving from a debt-based fractional reserve fiat system to an equity-based, for every loan or deposit has to exist system, which I think is a step forward. And really, stable coins have created what I couldn't really figure out back in the day when I was trying to create a fractional reserve bank, but really it's evolved into that. And so I think it's a good movement. It's a good step forward. There's still, all of the challenges, and you will have to decide in the future, what different pockets of money use for different things. But I wouldn't be using it for my savings, for example. You're probably going to have enough money in a stable coin in order to meet your everyday expenditure. And then you're going to be deciding what to do with your savings based upon, your theory about where you're speculating.
Are there any particular stablecoins you personally use?
Well, at the moment, there is only really one game in town. So we're a shareholder in Bitfinex, I should say. They created Tether. That's where all the liquidity and all the crypto-to-crypto exchanges are using. I'm also a shareholder in Circle through Bank to the Future, which created the USDC coin, but there's just nowhere near as much liquidity. Coinbase are using that. We're a shareholder in Coinbase through Bank to the Future. and Paxos is doing certain things, but really at the moment there's only Tether if you want to have the liquidity and be able to move that around freely. That's whether that changes or not is another thing, but it's pretty sticky, and I'm sure Facebook's going to have an impact there as well.
All right, next question as we wrap up. Are we moving to a gold standard financial system?
I think that we're not going to move back to a gold standard, but I do think there's a possibility of a Bitcoin standard. And here's the way I think it could happen. And this isn't, obviously that's Seyfedina Moose's book, but here's how I think it could happen. I think the smallest economies in the world can actually put a portion of their electricity and power into mining Bitcoin. And I think more and more smaller economies might actually speculate on holding Bitcoin as a hedge, as an uncorrelated asset. Therefore, when they accumulate a certain position, their interest is to announce, the small central bank, that they're using it as a reserve currency alongside dollar, treasuries, gold, and all those different things. Once one central bank does that, that's probably going to drive a lot of adoption in people using it as a reserve cryptocurrency. And you end up in a game of chicken where central banks are trying to accumulate Bitcoin to hedge their positions to gain more influence against the larger central banks like the ECB or the Fed. And the smaller central banks have the vested interest. And then as more and more of them announce that they're using it as part of their basket of world reserve, of reserve assets, then you end up with the largest central banks being the last ones to do it, because once the Fed announces that they're using Bitcoin as a reserve asset, they're basically saying that's the end of the dollar. So they'll be the last one to do that. But it could end up driving lots and lots of adoption where central banks use it, and you have this game theory situation where the ones that do it first are the ones that gain the most if they accumulated the position first. And I could really see that happening, and Bitcoin becoming one of the assets that central banks use as a hedge. And I think they will have a fiduciary duty to do it in the future, because at the end of the day, lots of pension funds and institutions, when we get these products, are going to have an uncorrelated asset. And I think it will become a part of responsible fund management to invest in alternative asset classes that are not correlated to traditional asset classes.
Wow, I mean, I can definitely hear you talk all day. Okay, next question. What's your stance on remittances in this space, and are there any companies you like?
Yeah, so we've invested in several companies in the industry. BitSpark is my go-to expert in understanding remittances and cryptocurrencies. They've been around the block, as it were, for a long time. I am a shareholder in that through Bank to the Future, obviously. But he's George Harap and Maxine, the co-founders of BitSpark. They've done a really great job of understanding all the different protocols, how Bitcoin can be used for remittances, how XRP can be used. We're obviously also a shareholder through Bank to the Future and Ripple Labs. But at the moment, the use case hasn't been quite figured out. But I do think things like stablecoins, collateralized lending are going to actually suck up a lot of savings, where fiat money is going to convert to stablecoins. Those stablecoins then can be used as collateral and create higher yielding savings products, and therefore really have a real impact in terms of driving lots of fiat currencies in. Then you can use a lot of that for remittances, and I think Facebook will certainly have impact there if they get through. But it's still a nascent industry. When you're dealing with if you price things in a local currency and you need to receive it in a cryptocurrency, it's very hard to manage your life around that unless you've got excess reserves and you can afford to ride out the volatility. But I do think there is certainly a use case for it there. It hasn't been proven yet. We need more advancements in things like Lightning Network and various other things. But I really do think there will be an impact there eventually. It's just not there yet.
All right. Well, that concludes the show. It was a pleasure having you on, Simon. You're definitely very, very well versed in this space in terms of pretty much A to Z. And I think this was definitely a very educational interview. And thank you to the audience as well for asking the questions. If you guys enjoyed the interview, please share this with your community, your friends, thumbs up, like, whatever. And any last words, Simon, before we wrap up?
Yeah, I just want to say thanks for having me. Education is one of the most important parts of this industry. There's so much, finance is full of jargon, technology is full of jargon. They're both intimidating. Combine finance and technology, and you've got a mountain of things that people can get confused with. So keep up the education. There's a lot of people that are going to need to adjust, and I hope that people do it before they need to, rather than a panic in a systemic risk event, trying to learn all this on the move. So keep up the good work. Educating people is a really important piece of work to do.
And so where can people find more about you and the company?
So if you want to get hold of me and my thoughts, I go live on Twitter every day at Simon Dixon Twit. I didn't get Simon Dixon, so I had a twit at the end, and it was such a long time ago, I've kind of stuck with it. And then if you're interested in investing, then go to banktothefuture.com. If you register for an account there, or go to the YouTube channel, we'll let you know about all our live stuff, and you can gradually get involved in that stage.
All right, thank you very much, Simon. And guys, as usual, these are just our personal opinions. Always do your own research, especially when investing in crypto. And with that being said, we'll see you next time. Take care.
Thank you.